Welcome back to Real Vision's Crypto Gathering. I'm especially excited about this panel. I'm going to be talking to Jalak Jobanputra, founder and managing partner of Future Perfect Ventures. Welcome, Jalak.
Thank you. It's great to be here.
It's great to have you. I've been looking forward to this because you have an interesting background. We've talked to a lot of people who have grown up in the fintech space. We've talked to a lot of hedge fund managers and asset managers. Your background, I think, for this is just absolutely perfect. You have a slightly different background. You come to us from a pure play sort of venture capital, fintech, technology investing perspective. Tell us a little bit about how you got into this space.
Well, There were 3 years when I was an investment banker on Wall Street in the mid-90s in TMT, was in New York and London. And that's really when I started getting really interested in tech because the Netscape IPO happened in 95. And that was really a transformative moment for those of us in traditional finance. Became really fascinated with the role of technology in terms of bringing the world closer and the whole concept of logging on and getting any information at your fingertips instantaneously was really exciting back then. And I started my venture career in 99 investing for Intel Capital out in Silicon Valley. Intel at the time and still is a very active venture investor focused on looking at applications and technologies that can help in terms of its core business of producing chips and creating more and more demand for their chipsets. And so 99 to 03, I was investing in kind of the belly of the beast and during the dot-com boom and the bust. And saw firsthand what can happen when too much money goes into a sector that is still immature in terms of development. You can have a lot of potential, but technology and entrepreneurship and new business models take time. And I've been in venture at various funds since then. And about 7 years ago, I had decided already that I was going to launch my own venture fund. There were a bunch of gaps I saw in the market. One was that I thought we were primed for a next wave of technology development. And I'd seen the PC give rise to companies like Intel, like Microsoft, and the hardware and software business models. Then we saw the internet take hold that gave rise to cloud computing, that gave rise to companies like Uber on the mobile side. And so we had a very connected world now, and a lot of it is due to companies that came before, like Intel. So faster processing power gave rise to more different types of applications, more personalized applications that arose from artificial intelligence. And then the smartphone became accessible to more people around the world. And what happens when you have a smartphone? You start being able to do more things, collect more data if you're a company, or as a user, you're now able to do things like store money, send money, and we started seeing that happen around the world. And so the fund's thesis was about this kind of distributed connectivity, decentralization that was already taking hold. And then I went to my first Bitcoin conference in 2013. And that was like this aha moment for me in terms of what could be like the platform that drove this next wave of technology development. This whole idea that you didn't have to have centralized computing, that you could decentralize computing. And Bitcoin was really the first major application of this truly decentralized compute model, called what we call blockchain technology or distributed ledger technology. And so as a finance nerd, I was really fascinated by how Bitcoin could be this alternative asset, could allow people to really control their own capital, versus kind of allow others to control it for us or shut off access whenever they deemed appropriate for their purposes. And then as a technologist and technology nerd, I became really interested in the underlying technology. And so since then, we've invested in over 40 companies in the sector. We do really early stage investing, either at the seed or the Series A level, and really help the companies grow to much larger companies.
Yeah. What is it that you look for especially? What is it that makes a great candidate for you to invest? Do you have a particular thesis that you like to fulfill, or is it just a sort of gut feeling? And if so, what drives it?
Yeah, well, when you're investing often at just a concept level, it's really about the team and the entrepreneur. It's how passionate is this entrepreneur going to be to be able to weather, all the ups and downs that come with starting a company. And so that's really, it's that resilience, that passion that is, I'd say, the biggest indicator of success. Now, a close second to that is how willing is the entrepreneur to take external feedback? Because often when you're really early, and I experienced this with my fund also 7 years ago, you have to bring along other people and convince them, and whether it's business partners or customers, customers are willing to give the technology a try. So it's important to be able to take that feedback, but still stay focused on your mission. And that's been another big indicator of success. And then the other is timing, right? And you can't always predict timing. But if you look at when I started investing in the sector in 2013 and 14, very few people had heard about Bitcoin outside of a select few. And the entrepreneurs that have the largest companies right now are ones that were able to kind of stick with it and wait for the market to come to them, while also trying to educate the market to further that development. So it's a lot of intangibles, and I would say it really helps to have been doing this for 20 plus years and being able to see what's worked, what are the indicators of success, and then being able to, I often say sometimes you're a psychologist when you're an early stage investor, sometimes you're a coach, and sometimes you're, the bearer of bad news, and so it's being able to build that rapport with the entrepreneur, that you're able to share, the bad news as well as the good news, and hopefully have, an outsized outcome at the end.
So you were very early to the space, 2013, beginning to make your first investments, 2014. What was it that led you to do so? And what was it that captivated you to a point where you were willing to put in capital? It's one thing to be interested in the technology, quite another to write a check.
Absolutely. So I was born in Kenya, an immigrant to the United States, came when I was young. I didn't speak English when we came to the United States. And so growing up, I had gone back to Africa and India on a pretty regular basis when those countries were not developing, Africa's a continent, but, when those regions were not developing the way that they are now. And I became really interested in devoting my career, even when I was a banker, and I mentioned that I did TMT investment banking. It was always about communication and how can we use whatever form of technology. It was pre-commercial internet, but once the commercial internet happened, how do we use this as a way to grow economic opportunity? And I'm a big believer in how economic opportunity is kind of the solution to a lot of the issues, political and otherwise, that exist in the world. So when I saw what Bitcoin could do in terms of that same feeling of being able to press a button and access the internet in 1994 and information instantaneously, that you could actually access your assets instantaneously, send them to whoever you wanted instantaneously without having large fees associated with it, without having to wait 3 days or 2 weeks for that money to clear, without having a bank account or having to wait until Monday morning, and to me, and I say to a lot of the digital native generation, that's a really strange concept. I mean, why do we have to wait? Why can't we send money over the weekend and have it reach its destination? And why do we have to wait 3 weeks for it to clear sometimes in certain countries? And why do we have to pay 20% fees for that to happen? And so it goes very much, it just spoke to the ethos I've had of why I got involved in technology to begin with. And to me, it was really the next generation. And then you take it beyond just money, you take it to kind of any asset. It's my data, it's my healthcare data. I mean, why can't I access all my healthcare data at a touch of a button? Why do I have to send a fax to the hospital that I went to, 5 years ago, and then have to wait for a fax in return? And that still happens in the United States, in what's supposedly, arguably the most developed or one of the most developed countries in the world. So it was really looking at how far behind kind of our practices were to what technology could really enable, and the fact that we needed more imagination. And I'd say, having lived through the 2008 crisis, and seeing how, and that's when Bitcoin was created, in the wake of that, just seeing how few people kind of benefited from what was put in place to remedy that crisis. And we're starting to, I think, with this crisis, start to see it. Governments are kind of out of their ability to decrease interest rates, and they're now putting more money into the hands of the people, but that's soon to run out. So I really do think we need new kind of solutions for if we want to look at global GDP growth. And so it was kind of, and we couldn't have predicted COVID, but if you look at a lot of what I've been investing in related to crypto as well as outside of crypto, we're really seeing a moment where we're seeing the need for this technology and the companies that are creating new business models out of this technology.
Yeah, I tragically did not receive any TARP or TALF funding myself, sadly.
Right.
It's interesting.
But plenty of banks did who, then held on to that money and made sure that they did okay.
Yes, they did just fine. It's interesting. You talk about faxes. I was baffled by faxes in 1999, and it's incredible that in healthcare that they are still used. I guess some of it is because of some of the regulation around privacy. I'm curious, when in 2013, just to continue this walk back down memory lane, in 2013 and 2014, what were you hearing from your colleagues here in New York, out on Sand Hill Road, when you told them that you were making investments in this cryptocurrency space?
People thought I had gone off the deep end. Yeah. It's interesting. I mean, this sector has grown so much in terms of awareness and in terms of who's involved. It's been great to see. So it's amazing to think just 7 years ago that it was just considered very fringe to be involved. And given I had this long-standing career in venture, it really took a lot of people by surprise, because even people within venture viewed it as very fringe, as not going anywhere. I mean, Mt. Gox. So I just decided to actively start investing after Mt. Gox happened. And the reason I did that was because I saw the resiliency of the sector and the passion that the entrepreneurs who were engaged, the developers and the entrepreneurs who were involved, Mt. Gox didn't deter them from their mission of creating new rails, new financial infrastructure. And so that to me was a very positive sign, whereas a lot of people viewed it as a negative and something to stay away from. I viewed it as the opposite, that I'm going to go kind of all in now, because I believe in people who were developing the sector. So it was People thought it was nuts, but there were enough people who invested in that first fund, and we've invested in some great entrepreneurs. We're very thesis driven, so the first fund was focused on the infrastructure build out. So we invested in companies like Blockstream that have some of the core Bitcoin developers who are building on their platform, making it more scalable. Lightning Network spun out of Blockstream. Also looked at my experience in the emerging markets, and I viewed that as one of the big kind of early applications of payments in emerging markets to be one of the best early applications of the technology, because there was such a need for it. So we invested in Ozo, which was formerly Bitpesa, and they have been using blockchain rails for FX transactions and payments in Africa, throughout Africa, and have been growing quite a bit, especially through the recent crisis. So we were very thesis driven in what we invested in. We did not invest in applications back then, because I viewed it very much as those kind of early internet days where you can't have a mobile, a mobile delivery, system if people don't have mobile phones and broadband connectivity isn't available. So
I still have my Urban Fetch T-shirt around.
Oh my goodness, that's another one I forgot.
Right. Urban Fetch. It's funny, interesting. Those of us who have been through a few of these cycles. I was working at Credit Suisse back then. In the late 90s. It's interesting that the perspective that gives you. And I think also when you look at it on a long enough time scale, in some ways one might say the thesis was right. The revolution was coming. We were a little bit early and maybe a little bit optimistic at the time, and potentially one might say even a little bit ahead of reality, I guess. But I'm curious.
Right. I mean, you have to suspend reality a bit to be involved early in something, and it's that resilience that matters, right?
Yeah, it's interesting. I'm watching on our internal Slack for this, and I'm looking at the question stream. And one of the questions that someone asked was, how do you manage and deal with that uncertainty around time when you know that you're going to be early to an investment? You know people are going to be laughing at you. You know that not all of them are going to be winners, but you believe fundamentally in the long-term outcome or the long-term thesis or the vision of what the world will look like.
Yeah, it's definitely a balancing act. I think comfort with uncertainty is just something that more and more people, when I get asked by younger people and who I mentor, and they say, what's the most important key to success? And, it's that resilience and I think that comfort with uncertainty. And we live in more and more uncertain times where there's a lot more information that we have to manage, and just being able to drown out the noise, and kind of staying true to a thesis, and kind of investing accordingly. Look, I've passed on lots of entrepreneurs that I liked. I liked the idea, but I just didn't think that there was a path in the next 5 to 10 years, which is what a venture fund looks at as an investment time horizon. I just didn't think it was going to be feasible to get there. And so, a key is like Finance 101, portfolio diversification. That's why we invest in 25 to 30 companies per fund. And it's really, some are going to be really early and too early, and that, and you've mentally prepared yourself for that. And then there, going to be others that are, just kind of right, and they'll be okay. And then you want to have at least a third of your portfolio as the breakouts. And sometimes it can just be one company as the breakout company that returns a fund plus. So just understanding those dynamics, I think that's where, we see entrepreneurs and operators get into venture investing. And that's where I think sometimes they have the issue with that portfolio diversification, or just knowing that not every company is going to be, home run, and you do everything you can to help the entrepreneurs and manage. But, there's certain things that are just external to a company, and not every entrepreneur is going to be able to make it.
Right. So Future Perfect, what typically are the vehicles you invest in? Do you invest in coins? Do you invest in equity? What's your typical model been like?
Yeah, so primarily we've traditionally done equity. It's a model I believe in. Even in 2017, when the ICO boom happened, I was very vocal about not participating in ICOs. Part of it was just from a regulatory standpoint. I'm a fiduciary to LPs, and it makes sense to me. It was just very murky from a regulatory standpoint. But I also
that cleared up for you?
It is. I mean, so Telegram, the SEC, and Telegram kind of settled just in the last couple days. Telegram has returned capital to its investors and not going forward with a token offering in the United States. And we've seen over the last couple of years a lot of settlements with the SEC, and there's more guidance. There was just a lack of guidance. It was something that kind of took regulators by surprise all over the world. It almost happened overnight. I mean, I remember, April, May 2017 was just, it reminded me of 1999 and 2000 and the internet, where it's just you sat there in front of a screen and just didn't know what was going on. And this is global in a way that, 2099 wasn't. And so you were having a lot more capital, a lot more speculators, a lot more tokens. There it was this, penny stocks, et cetera. This was, literally thousands of tokens raising money overnight. And a lot of FOMO associated with that. And, that goes to the investor psychology and just removing myself from that. But I even back then, I was very much a proponent and a believer in tokenization. It's really a new business model. So it's separate. So I look at, you look at Bitcoin, as an asset class, as something that's potentially investable as a store of value. And then crypto assets, which can potentially enable fundraising, participation by the users of a network, of the developers of a network, to then jointly create value, to create more stable value in a product or service. And then the third bucket is really the underlying technology. So very similar to like a broadband platform or the internet. How can we use this distributed connectivity to create more efficiencies and not have to go through servers and enable peer-to-peer interactions, or allow my health records to reside with me, but I can transfer them over in a secure way over to somebody else, or I can track the provenance of an asset. It could be a bond, it could be a piece of real estate. And be able to kind of program that asset. So there are three different buckets that I really look at when I look at this sector. And I believe tokenization and that the middle one is a really interesting one of how, versus just shareholders and management, how do we get users involved? How do we get people who are developing in this open source way, creating and value and retaining value from their interactions. So I believe in all that.
Those three buckets are tokenization, decentralization, and then the control.
The decentralized technology, and then like the store of value as this alternative, and I really right now look at Bitcoin as the major asset in that category of how do we have this independent asset, independent self-sovereign asset, and so we do. We're big believers in Bitcoin. We're big believers in the decentralization. We're big believers in the crypto asset bucket, but the crypto asset bucket is not mature yet. And so I expect we will hold more crypto assets as time moves on, where we've invested equity in companies that may issue crypto assets, but we're very much collaborating with them to see if it makes sense from a business model standpoint versus just a pure fundraising standpoint, which is what has really happened to date so far. So right now I'd say we're like 90% equity, 10% the other categories. We will probably, have more of the crypto asset allocation when the market is more mature.
Yeah.
And the beauty of it is they're going to be public. So, the ability to buy in and buy into dips and really use the information that we have when we're doing the private investing, I think is an asset as we move towards a more public token investing.
So you mentioned the tokenization of traditional financial assets. Where do you think we are with regard to that? What's the state of play, and what are you predicting going forward?
Yeah, we're very early. So we invested in a company called Harbor a couple of years ago. They were just bought by BitGo, which is one of the largest custodians in the space. And so they start off tokenizing real estate assets. And on surface, it's a great concept, any tokenization of assets. So you're able to create more efficiencies, offer more fractionalization, broader financial access, and then more liquidity on the back end for these assets. The reality is that the market isn't quite there yet. I suspect it will be in definitely within the next 5 years. And I do think when we run into financial crisis, it becomes more and more kind of apparent the gaps we have in the current financial infrastructure. So, for example, I was just reading about Zimbabwe, and yes, Zimbabwe is not the United States, but they just shut down their stock market. And they've had this hyperinflationary environment. So people started investing in the stock market to be able to have some safer assets than cash. And the people who can access it have been trying to buy Bitcoin. However, the government, because they were worried about the amount of inflow into the stock market, shut down the stock market. Now, if I held an asset that then could be tracked and I had all the provenance and that was transportable across borders, then I wouldn't be as worried about that situation. Or maybe I can access market in the U.S. Or another stock market other than the local stock market. So just like we've seen more and more people kind of this flight to digital assets and specifically Bitcoin during this time period, I think more and more people will hold different types of assets if they have access to them. Robinhood is an example of a fintech company, very kind of millennial focused, mobile first, and they've seen huge amount of growth during this time period. We're an investor in a neobank called Current, which also has seen phenomenal growth during this time period. People are looking for ways to store their capital and access it, and be able to they don't have to have $1,000 to buy X stock. They can buy some stock for $5. So I believe that self-empowerment and that tokenization and fractionalization of assets can enable is really powerful. I do worry about the education and making sure that people are educated on financial literacy as part of that process. And that's something we do spend time with the companies we invest with and making sure that that piece is also there.
And we're going to talk more about emerging markets in a minute, but I'm curious. You mentioned a 5-year time horizon for what you think of the likely maturation process of the traditionalization, this tokenization rather, of traditional assets on blockchain. I'm curious, What is your view of what that world might look like? What might it look like when we look at, what your view is, for example, of the likely best case we find ourselves in 2025? What does that look like to you?
Well, a best case would be that individuals, and like, I think this is good for the economy as a whole. So it's not just about charity. It's about how do we make individuals, allow them to monetize their assets, right? Or have access to investing in assets. And so, I would like to see platforms emerge that allow anybody to buy a piece of real estate. Say there's a coffee shop that they go to a lot, and they want to buy a stake in it, and they support it. And every time they're able to, or if they get a piece of the profits, if they refer enough people, or if they spend enough. And so we've seen a lot of this in the form of loyalty points and other kind of more siloed assets that companies control versus the individuals. So I think we'd just be better off. We would not be in kind of the dire straits we are right now if people were able to do more with the capital that they do have. And I have always believed, and having been exposed to the emerging markets from such an early age. And I'd say after business school in '99, before I went out to Silicon Valley, I lived in Dar es Salaam for 6 months, training women entrepreneurs. And this was not, the internet hadn't really hit Africa in any big way yet. But I was, they had kind of borrowed money to buy food processing machines. So like literally sunflower seed pressing machines, and so what I saw there and the capabilities of this women was, very savvy, some beyond, much beyond the people I went to business school with. And so I have just believed that you give people an opportunity, you give them a piece of technology, you give them the opportunity to invest, that most people will do well. And we just haven't given people that opportunity. Now I'll just say M-Pesa in Africa, which is in Kenya, which is the mobile payment system that the government and Safaricom put together in 2007, started off as a way to distribute microloans because it was just very costly to get cash distributed out. And so they started this mobile money system. And once, these people had, and a lot of these were women, some of them were grandmas on these feature phones, not smartphones. Once they had this money in their mobile wallet, they started doing things with it, like sending it to relatives, and they start innovating on their own. So this whole idea of this grassroots, and this is a little bit, off topic of what we started off with, but it's this whole idea of this grassroots movement or giving people access to assets, and then they'll do things that everyone, I believe, at the end of the day wants to further themselves and their kind of lot in life and leave more for their children than what they had. And so, not everyone's going to do that, but I believe I'd like to see a world. I don't think we're going to get there in 5 years, but see technology move in that direction where we can enable that. And I do believe we're going to see positive results, from the 1%, down to the 99%.
Well, those are just extraordinary stories. And I'm curious, we talked a little bit about emerging markets and the potential for these technologies to help emerging markets. We're getting asked about it right now in the Slack channel. Chris has just asked what you think about fintech and emerging markets. So I'm curious, what do you think the use cases are? What's the promise? And what are the unique characteristics that these technologies can use to help people in emerging markets?
Yeah, so I mean, what's been interesting in emerging markets is how mobile first and how technology first financial services really is. So I think I wrote an article 7 or 8 years ago called "When Third is First," and it was really, and I hate using the third world because I don't believe we have third worlds anymore. But it's this whole concept of emerging markets leapfrogging more developed markets simply because the infrastructure is newer. They never had landlines. Even when I was working in banking in London in the mid-90s, I was working on interactive TV because they had broadband versus the cable networks in the U.S. didn't have broadband. They were just upgrading. So I say that we can really look at some of those models in the emerging markets. And I believe crypto is an example of this. It's, peer-to-peer, without, people are used to transacting peer-to-peer without dealing with an institution. And so lending and microloans has been a big part of development there. And so how do you start to digitize that? So we're starting to see so many neobanks emerge in these regions that you can see what's happened in China, right, with WeChat. So it's a social application, a messaging application that became a fintech and became a primary mode of payment. And so I do think we're going to see a lot of localization now. I mean, I'm sure you read that India just banned 59 applications. I believe they're all Chinese, and it's and that happened yesterday. And so I'm really looking at what's going to happen in India and local fintech, and certainly. The government is reacting to a border skirmish that was very analog, and the reach is, Ladakh and the Tibet border, which is disputed territory. 20 Indian soldiers were killed. But this is retaliation for that through supporting the local digital industry. And so most people who are banked in India are banked through mobile platforms. The same thing with China, and these are non-banking, financial institutions. Same thing in Latin America, and so, I'm looking at things like insurance. A lot of the emerging markets, citizens don't have insurance, and so how do you create micro insurance, personalized insurance products across different classes? And I think we can bring some of that innovation back to the United States.
Yeah, it's so interesting, the idea that a legacy architecture can become a liability that prevents you from thinking about things from a fresh sort of blank sheet of paper perspective. Yeah,
and it's I call it the incumbent problem, right? And we see it all the time with large companies who don't see the threats. Or can't innovate quickly enough because they're kind of in a position of power, or they have, they have a lot of cash flow. They don't need to innovate. But when you start to, for your livelihood, have to innovate, or you have all this pent up demand, but no services before, I think that's when you can see how legacy and kind of prosperity can be a burden. And I think we're really seeing that in the United States right now.
It's interesting. We just got a question on the Slack from Patrick. What would crypto technology bring that current micropayments do not do for users in developing nations?
So micropayments. So I guess it depends on how you would define micropayments, because. So can we ask that, like, what exactly he's referring to in terms of?
I'm sure he's probably listening. Yeah. So Patrick, what would you mean? How do you define micropayments? I mean, I would say, look, it's interesting. There's obviously some potential overlap between the two. If you draw the Venn diagram, there's going to be a lot of union between those two sets.
Well, one of the reasons I got really interested in crypto and Bitcoin was this whole idea of being able to enable micropayments, these satoshis, these fragments of a Bitcoin and transfer it at a low cost. And that's why I asked what exactly meant by existing micropayment solutions, because right now it's still very expensive to send a micro payment, because you have to do it, if you're doing it through financial rails, you have to go through credit card. I mean, PayPal goes through our traditional, with credit card fees.
Right.
And so now M-Pesa is an example, and if that's what Patrick's referring to, where you're able to send money peer to peer. However, that is controlled by a central entity. So, and this has happened many times where Safaricom was upgrading their network, the whole system went down, nobody could access their money. The government, and we see this in Zimbabwe, they've shut down their mobile payment system. So whenever you have a central entity controlling that micro payment or digital payment system, there is that risk. And so theoretically, Bitcoin, I mean, it's so distributed and decentralized right now that there's no one entity that can shut it down, that you will be able to access it, whether it's through a VPN or other means. You'll be able to access your money and be able to send it.
Yeah, I think their questioner got back to us. He said, "What you quoted, the current system already available in Kenya, where people can pay using their phones." So it's exactly the point that you were making, which is distributed, resilient to central government shutdown, and also potentially lower costs. So it's probably that constellation of features. Yeah, very interesting. So a bit more before we close out emerging markets. Final thoughts. What are you going to be looking for in the emerging market space over the next 1, 2, 3 years?
Yeah, so I mentioned India, and India is a market that I've been investing in for most of my career, very familiar with it. It often gets overshadowed by China, because China's just been on the surface easier to do business with, right? Because the infrastructure works. I talk to other investors who say, everything's shiny and new. I go to India and I have to deal with a cow on the road next to me and all this poverty that is in my face. And so, but if you look at sheer demographics, it's overtaking China soon in terms of population. It's a very young population. It's a digital native population. And they have had a government that has been business friendly. But also, I think we're seeing this all over the world, is we're seeing a nationalist movement around the world. And then I think COVID has just kind of spurred that or accelerated that process of closing borders and so physically, as well as with what you look at what India just did with these Chinese applications, and just literally people cannot access WeChat there overnight. So I actually think there's going to be a lot of local innovation that's going to be supported by the government and then supported by this huge population. Look, they're going through a tough time right now. COVID cases are rising, but the government, I was there at the end of February, and they were doing more at the airports than JFK was doing when I got back at the end of February. And so it is and this goes back to the incumbent issue, right? It's when you've had prosperity and open borders and you've been okay, you have a lot more leeway. Whereas a country like India is arriving, and they need to make sure that they take advantage of this moment in time and not risk it. And so very, very interested in India. They just lifted the crypto ban. Even through the crypto ban, I've seen so much innovation on the back end technology. We're seeing more and more entrepreneurs that have gone through several cycles of building companies. So there's kind of more of that risk-taking mentality that you look for as an investor, and they're building companies beyond the Me Too products, right? That they're building robotics companies, they're building really innovative crypto companies, and they just have so much talent and pent up demand. So that's a market I'm looking at. Look, I think all these themes of robotics, AI, combined with crypto, sensors, and IoT. This has been our thesis for 7 years, and all of these are accelerating, and we're seeing entrepreneurs in the U.S. As well as entrepreneurs in other regions innovating. And one of the most exciting things is a lot of this is based on open source technology. So there are no silos around what these entrepreneurs can develop upon, and it's very collaborative, and frankly, that's something that I think a lot of people who've been investing in the kind of the 20th century or cut their teeth in the 20th century have a hard time just grasping how collaborative and decentralized models can really work. And it really seems to be, what these Gen Zs and millennials are really grasping and holding on to. And I think that's going to continue in the next century.
Yeah. Talking of this century, the opportunities and the challenges, you've anticipated another one of our questions. This one comes to us from Adil. How has the COVID-19 crisis altered your view as founder of your company towards fintech and technology in general?
Oh, it's just reinforced why I started the fund and kind of the work that the entrepreneurs in our portfolio are doing. I mean, most of them have been thriving during this time period because they've been building technology that is needed, that we've seen the gaps for, and that ranges from telemedicine platforms to, most of our portfolio is around fintech and crypto, but we're very much focused on the applications that are relevant today. And if you just look at the news of the last month or 2 months, the amount of fintech acquisitions have accelerated. I mean, Personal Capital was just acquired, or the acquisition was announced today. Empower Financial bought them, and that's $1 billion acquisition. Plaid it was acquired by Visa for $5 billion. So you have a lot of incumbents in the financial services sector that have not been able to innovate or meet the needs of the next generation of investors and consumers, and they're really acquiring to get those capabilities. And we're seeing it kind of left and right in our portfolio in terms of inbound acquisition offers. So what used to happen is these banks and financial institutions used to innovate in-house. Everything, it was a not invented here mentality. It's like if it wasn't invented there, if they didn't want to partner, if they didn't think it was good technology, that dramatically changed post 2008 when companies had to spend more money on compliance. They were hoarding more cash, had more cash reserve needs, and so that innovation wasn't happening in-house as much, and so it's been pushed out to partnerships and then acquisitions. And so we are very kind of bullish on those, like the exit scenario of and exit potential of the sector, as well as just the pure raw technology needs that are going to expire.
Absolutely. Just the culture of innovation, very difficult to establish for incumbents. I've worked at Credit Suisse, worked at BB&T for many years doing e-commerce, and of course worked at CNBC as a reporter. Yeah. And it's just very difficult to disrupt yourself. There are just too many forces of inertia, and sort of just bureaucratic inertia that pushes you forward toward doing things in the same way. And I don't think that it's a knock on any of those large organizations, because the capacity to do something at scale is very different than the ability to interrupt and disrupt an industry. They're just two very different ways of looking at the world. And I think, as you suggest, they're complementary, and that's where some of the opportunities are.
Yeah, absolutely.
Yeah. I'm curious. I've said this earlier actually, and it's a very difficult and delicate thing to say, of course, because COVID has been an absolute crisis and a human tragedy. But at the same time, there are opportunities that it seems to be unlocking potentially to improve the lot of humankind in general. And some of these things I would almost refer to them as jump functions. It seems as though the technology has been building and building and building. It doesn't get implemented because, again, of those forces of inertia that come. And then we find ourselves, like, for example, I think many of us would have thought that when people couldn't go into their offices any longer, the economy would simply be shut down. But, here we are. I'm in my apartment. You're at your place, and we're doing this via Zoom. We're able to have a full conference. We're able to be interactive here with all of our viewers on a Slack channel. It's pretty incredible what we've been able to do. And these technologies existed certainly 6 months ago, but the opportunity to use them to demonstrate the case for why they could contribute to communication, interaction, connection hadn't been made until we had the opportunity to do it.
Absolutely. Going back to the fintech question, right? If we had a system in place to distribute payments from the government to people instantaneously, I think that would have gone a long way to helping a lot of people out that needed it, desperately needed that financial help in a real time manner. So if I look at where technology can be helpful, it's that personalization, that real time nature, and also again, going back to the assets and keeping our assets safe, and so we can all, have some sovereignty and kind of the benefits that come from that. And I think we're definitely seeing it from governments. And even if they don't care and they want to hold power over, their populace, which is true of pretty much all governments, but they still saw that the unrest that can happen from not being able to meet the needs of people, is a dangerous thing that can usurp the power that they have. So and that goes into this whole other, central bank digital currency conversation that I know we don't have time for,
yes.
Maybe some other time, but that the CBDC conversation has gone to the heart of this issue, and how much control governments want to have, but also being able to digitize and provide more services to people.
Chuck, I was just about to say my one fear for this panel has come true. Too much to say, not enough time to say it, and we're at about the 2-minute remaining mark. What are your final takeaways? How would you sum up just what you've expressed to us here today?
We're going through a really challenging time overall right now, but I believe that if we kind of embrace technology innovation, and I think crypto and blockchain tech is a key part of our future, if we continue to build and put capital and grow these companies and support these entrepreneurs in the sector, I think we'll all be better off globally, and hopefully the next time a crisis like this hits, we'll have these technology pieces in place to kind of soften the blow the next time.
Yeah, so much more to talk about, and we'd love it if you could come back and continue the conversation.
I'd love to, and thanks for having me. And it's been fun to watch your panels, and I've been learning a lot. So thank you for doing this.
Thank you, Jalak Jobanputra, founder and managing partner of Future Part Perfect Ventures. Thank you again.
Take care.